Let's now check in on the stock markets with Jessica Amir, who's a market analyst for Bell. Thanks for joining us, Jessica. Appreciate your time. Must have been a busy day. You're with Bell Direct Markets. 7% at the end of the day. Is that where we finished?
Yeah, that's right. 7.3%, Chris. It wasn't a good day for the markets. In fact, we lost $137 billion. It was, in fact, our biggest drop since the GFC. All of the sectors were sold down today. Energy, of course, the hardest hit after the energy price tumbled at the weekend and then again earlier today. Really on the back of OPEC not coming to the party and making those production cuts as expected, which was hoping, or which we hoped to see would prop up in the wake of coronavirus dampening oil demand. So there were pockets of red throughout the market, but we did see on the ASX 200, we did see three market darlings rise up today. We saw Fisher and Paykel, Newcrest Mining and SKI, a Spark Infrastructure company.
So how much of this was to do with the oil market shenanigans and Saudi Arabia exercising its market power there, I suppose, and how much is fear over continued damage to global trade because of the coronavirus?
That's a really good question, Chris. Well, in fact, markets have fallen from their all-time high back in Feb. So we're now down about 20%, which means that we're well into correction territory. So largely this is because of coronavirus slowing global production. Of course, parts of the world continue to come into lockdown, Chris, and of course this has been a concern, exactly what would happen, and it's coming to fruition. We've seen Italy locked down as well at the weekend, and now parts of Sydney as well are being closed down in terms of some schools. So coronavirus is definitely having a hit on global supply, and it's also causing demand concerns as well. But we are expecting there to be a rise after coronavirus is contained. Secondly, for the largest part of the market, we did see that massive fall today from the get-go. We fell as soon as we opened, and then we continued to fall throughout the day, despite some pockets of gold. Newcrest Mining, as we mentioned, some other gold miners rising up. But really, it is at the hands of the surprise OPEC production cuts not being made, which would boost oil back to where the market wanted it.
Now, of course, we'd all be well and truly retired if we could pick these things. The market was pretty volatile last week, dropping sharply, regaining some of that territory. Is there any expectation with Wall Street opening tonight where we think it'll go? Is there a sense that there might have been an overcorrection here, or is it a matter just holding on and hoping for the best?
Well, that's a really good question. What we're actually seeing with our clients, Chris, is two things. One, we're actually seeing them top up their defensive exposure, because we know those parts of the market that are defensive, i.e. healthcare, utilities, which is why we saw them hold up today. These stocks and sectors are likely to outperform when the economy cools. Now, we know GDP in the first quarter is tipped to be negative, so we'll wait and see what happens. But absolutely, clients are battening down the hatches and holding firm, but nevertheless we are seeing some parts of the market crystallise some losses, which is disappointing to see. We're also seeing some investors take advantage of times like these, which is a little bit disappointing. We're seeing them crystallise their positions and take advantage of the fact that some of these stocks have been running very, very hot. In fact, some stocks are around all-time highs. For example, CSL is continuing to track near all-time highs, and they continue to see quite a lot of buying today.
Yeah, they're backing on. People hoping that they actually developed a coronavirus vaccine. Thanks so much for joining us, Jessica. Appreciate it.